The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, there's a lot of things happening in River City, as they say, and we'll take a look at the DAX. As you can see, we've just completed a Gartley here. Just as up to date. This is not very. This is within the hour, so we are completing a Gartley in the DAX. We'll cover the stock index futures in just a minute, but I wanted to bring that up, and then also show you that the FTSE is very, very close also to completing a Gartley in this area here. So it's going to be interesting, especially given the action that we've had overnight. Both Tommy O'Brien and Steve Rhodes both talked about, the overnight action. And Tom brought us up to date, very, very recently, the fact that we've rallied, 60 handles off the bottom in the NASDAQ. And I think there's a really strong reasoning for that. In fact, we might as well do that right now. But the first thing I wanted to do is I posted the email that Shane sent us out this morning about the possibility of a major bottom coming in at this area based on, the work that he's done with planetary speeds of Mercury and stuff like that. And I just wanted to bring you up to date to show you the example that he brought in, and that was back from that flash crash way back in many, many years ago. But this is what was happening, and we're seeing the same thing happening now. So I don't know if it's going to be the same thing or not, but we're right at that level, and we're seeing some really major divergences in the stock indices, folks. It's really quite amazing considering the emotionalism in the market, and we're not just seeing the emotionalism in the market in stocks. I mean, we had a 60-cent drop in soybeans overnight. They've held at the 61% retracement so far in November beans. We saw a big drop of more than 20 cents in corn. It stopped exactly at the 78% level. So I think these things are very important. But, the news, that the people put out there, it's no different than the political environment. They put out in the financial environment the same type of stuff for fear and greed, folks. And believe me, that's what these things do. They trigger fear mechanisms, and that's one of the reasons why I went into technical analysis, is because it just is really quite unusual to try to understand how some of these things can actually affect these markets, but they really do. And the emotionalism of people, when they lose money or something is very, very dramatic. Just to give you an example here, remember, this is a 4-hour chart that I'm going to post here on the soybeans, but I just wanted to show you the importance of some of these ratios. Look at this soybean chart and go back since December. Our high in December was 1018. We went down and we made a bottom down at 970. Look at the 1.618 expansion 2 days ago, folks. Exactly at 1060, which was the exact 1.618 expansion of that move. And if you'll notice, that was right after the crop report. It went up. It was a very friendly crop report. And then what we've had today now is the market get down to below $10 for just a little bit. We're trading a little above there right now. And we're seeing the same type of a pattern in the December corn. December corn, instead of making the 61% retracement like we've made here in the Dow Jones and in the soybeans, is at the 78% level. One other comment that I would like to make about the soybeans. At night, 1 second here, someone's asking me a question, and we'll see what's going on. Okay, let's just take a quick look here. I wanted to talk to you just a little bit about soybeans. 1 second here. Yeah, it's still a marvel to me, Mr. Z, is how they've hit these numbers. But in 1964, doing my master's degree in Indiana, we had a guest speaker called Paul Samuelson, the Nobel Prize winner in economics. And he talked to us about soybeans. And the two things I remember the most about that speech was, one, he said, First of all, he said you'll learn more about going short a contract of soybeans than you ever will in 2 years of any business school on this planet. And the reason for that is it'll tell you about supply demand. He said it'll tell you about the use of margin, and it'll tell you the use of risk. And I remember that very, very vividly. The other thing that he said about the soybeans is that soybeans had an inelastic demand. It doesn't make any difference what the price is. They're still going to be used. We saw this, several years ago when they hit $18 a bushel, and we're going to be seeing it now during this time of tariffs and stuff like this. Folks, $50 billion between China and the United States for tariff is, it's a lot of money, but it's not a lot of money. And believe me, they go around the horn to get around some of these things anyway. So just be remembering that this stuff is very, very susceptible to change, and very, very easily susceptible to change. Now, we've got a couple of markets that are, one second, please, that are really reeling badly. I mean, have been for quite some time. This was long before the tariffs. So let me just bring up to show you one of these markets. And then I'll get to the stock index futures right after the break. We have plenty of time. You'll notice here, these are the July hogs. They made a 3-drive to a top pattern back there in January. We had the big rally back up to the 78% level in February. And since that time, they've dropped 12 cents a pound. Look at the multiple ABCD patterns that are coming in here, just a few cents lower in the hogs. I also didn't even put in the 1.27 expansion from the solar eclipse back in August. So there's a major bottom coming in here in the hog market, in my opinion, around the $72 a pound level, and we could make that today because we closed yesterday at 73.25. But believe me, these markets are dropping like flies in an electric light. So be careful of using. You got to be able to use a stop. In fact, it's probably better for let the falling knife stick in the ground and then take a look at it another few days. That's what my game plan is going to be. But look what they've done to the cattle market. And this has nothing to do, folks, this has nothing to do with tariffs and stuff like that. Now the tariffs, what they're doing is they're giving us a price to have easier hamburgers and steaks and stuff like that, which is really good. But this has nothing to do. There's not a tariff on cattle. I don't think we do much exporting in cattle. We do a lot in hogs, but I don't think there's a whole lot in cattle. So we'll see what's going on with that. But this is something that's pushing these commodity prices down quite a bit. Now, we're seeing one other thing that people are asking me too many questions at once. Let's get to this. I'll jump over to silver and gold. We got a break here, so I can't really say much until then. I'll cover the silver and gold here just a minute. Then we'll get into the stock indices because we have time right before the opening to take a look at it to see where we are. But we've got a pretty good chance here for a bounce here in this stock market, based on what's going on. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we have a question about the commodities and stuff as opposed to risk and the limit moves that we've had. The commodities have limits just like everybody else. We're aware of some of these that we have in the stock index futures. The last time we had a limit move in stock index futures was election night. They were limit down. And then, of course, had a little bit of a rally that lasted about a year and a half. But, we see very little of that. The only time you'll see limit moves is usually after a report or an assassination or some type of an economic event that will change things quite a bit. By the way, Mr. Z just told me while I was speaking, Simon only happened to be listening to the show. He Skyped me and also said that there are very large cattle beef exports, so the tariffs will be affecting them also. They pushed it down, so they're going to offer some really good value here pretty quickly because people don't stop eating just because they have to pay more. And when prices are low, it doesn't make any difference anyway. So let's kind of pay attention to that. Let's quickly take a look at these stock index futures because they're really rocking and rolling this morning. Here is the let's just get this up here. This was about 4 hours ago that I did this, and we went down to the 2560 level. I think we hit 2558. We're now trading at 2573. We did hold above that by quite a bit, but if it goes below 2555, you're going to be looking at 2508, and we could, if it gets really nasty today, it could really it could make that today without any trouble. That would get the Dow down about 2,500 points on one day, and we're expecting that but on one day, but we don't know when that day is going to be. All right, we want to look at a couple other things that I was looking at with the stock indices and stuff. I posted the chart of Amazon too to show you that it's at major support that we had at that level also. This is the main thing that we want to be watching. Let's just this is the updated version of that E-mini. Excuse me. Let's try it again. I did so much last night on these things, but they've changed the prices because we went a little bit lower. But let's just move this down because I wanted to show you the fact that this market is actually holding up a lot better than one would think, given the fact that the news is so darn bearish with these tariffs and stuff. And I don't believe that it's that bearish, but we'll have to wait and see. Let's get this next one up here, which is that's the corn. Here's the one I want to show you. Yes, there we go. This is this is very important one right here. Hold on right here, because we've had a pretty good rally here in the NASDAQ. This is the NASDAQ. We went down and we made a new low off of Monday, folks. Remember, we're just at the 78% level in the S&P and in the Dow Jones, but the NASDAQ has made a new low. It's since rallied quite a bit from that low, but getting below 63.20 would be very, very negative, in my opinion, to see if that's going to happen. That's it, pretty much. Someone's asking a question. You asked a lot of questions today. You asked a question about the crude oil. We've been very bearish this week on crude oil, mainly because of the fact that we were very highly suggestive that we made a long-term weekly double top in the crude oil that we focused on in the newsletter this week. So that's pretty much it. The one that I've got my sights on, the old crosshairs, is that gold, and I'm really bullish gold. We just made a 3 drive to a top pattern up at that 1352 level just a few minutes ago. It quickly broke about $6, so I don't know if that's going to be it or not. But boy, we're seeing a big divergence between the gold and the silver. That was one that I want to bring up to you and show it to you right now, because it's really this is a huge divergence here. Just put this up here and take a look at it. You'll see that we're get it up here so we can see it here. There we go. You'll notice here that we could barely make a 382 retracement when gold was making that 3 drive to a top pattern here just a little while ago. So this is telling me that it's not ready yet, but boy, when it's ready, it's going to be really ready, because it's got all the makings of a really major move coming here in gold. And one of the worst things you can have as a trader is to one of the old fears that Mark Douglas used to talk about is the fear of missing out. So sitting on the sidelines is a really tough thing to really get involved in. So we just have to wait and see if it's going to come in. Also, those of you that subscribe to the 24/7, we've been waiting to get into this Australian dollar, US dollar cross rate. That has not happened yet, and the Canadian dollar is working extremely well, so we're okay there. So those are the things that we want to keep a really close eye on this morning and also the next few days. But regarding the stock market, we've had some pretty good divergences down here that we talked about before. I want to bring this one up for the S&P, because this is the one that's going to be really important here. And those are the 4. You got it, David. Very good. Boy, you guys really are good, really good followers of Mark. Boy, what a superhuman being that guy was. Anyway, we'll be. Fact is, I got an email from one of his disciples yesterday from down in Texas, the Dallas area, and he was commenting to me about how much Mark had helped him, and Paula is doing a great job just carrying the torch. She worked with him daily for 30 years, so she knows his stuff really well too. So let's move on here and talk a little bit more about the stock market. We've had major divergences in the Dow Jones and the S&P and the NASDAQ. So that is telling us that there's something probably very significant occurring. When we look at what Shane Smolian sent to us this morning on the speed of Mercury. And speed of Mercury is one of the better trading signals for timing, folks, because this was the thing that George Baer used, and he was really a very, very successful trader going back into the 1930s. He actually lived in a beautiful custom-made rail car like the Wild Wild West. They brought it. He took it into Chicago during the summer months. And in the winter, he lived in Carmel and Pebble Beach, California. And we visited his daughter, Twentyman and I, back in 1992, and had a great conversation with her. And she passed away, of course, many years ago, but she told us the stories of her, and she had some wonderful pictures that she promised to give to me, but after she passed away, the attorney mysteriously misplaced them. I don't know what happened, but that's what's going on. Folks, these treasury bonds are also telling us it's not the end of the world as far as the stock market coming on right now. Let's take a quick look at these treasury bonds, what we were waiting for to get them up to that 47.10 level, 147 level. We got to 147.04, and what we did last night during the talk about the tariffs and stuff, it rallied exactly up to the 61% retracement, and we backed off about 10 pips from there. So unless we can clear 147.04, I have to assume that we're getting ready to move, to the downside in the Treasury bonds, meaning higher interest rates. So we'll see if that's what's going on. Let me take a quick look at these futures to see where the S&P is still holding its own here at 25.72. As long as we can stay above this 25.56 level, we should be okay. But going below that is going to set up some really nasty things to the downside, in my opinion. So watch it. We've got the bonds trading at 146.08. The key level there is 147.04. We'll take a little break. We'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I put up the chart of the NASDAQ 60-minute. That's a pretty big stock indices. The first one, of course, is the Dow, is the S&P 500. Then we have the Russell. Then we have the NASDAQ, and the least of the volatile or the liquid ones is the Dow Jones. But you'll notice here, yesterday we made a 50% retracement, just like we did before on the 29th. That tells us that the downtrend is still intact. But you notice that we took out the lows from Monday by quite a bit, and then we rallied. We rallied over 60 handles and now we're backing off a little bit. So as long as we can stay above this 63.18 level, we've got a chance here for some type of reversal today, only because we're seeing it in the S&P and in the Dow Jones also. So keep an eye on it. I also posted the chart for Amazon in there, also highlighting the 1.618 expansion. That should have some pretty good support down in this area also. Remember, there's a lot of emotionalism coming in because of the this thing with tariffs, mainly because we haven't seen anything like this in quite a while, and I still believe we'll see how things are. Still see how things are acting. Anyway, we'll watch that. But the key level, of course, is that 6,300 level in the Nasdaq, and the 26 right around the 2655. That area, 2650 in the S&P. Get below that, we're going to be heading down towards those big profit objectives that we've been expecting, and we're not very far away. We could make that we could make it today, as a matter of fact, if it gets really nasty, and that's in the Dow Jones. You'll notice here that we were expecting a rally to come in this week. It might not make it, but if the rally was last week, that sets up this potential here in the Dow Jones at 22,650. That is not that far away. That's just one little scare tactic by somebody, and you could easily, be looking at that without too much trouble. I think that's an important thing to remember. Now, on a technical basis, I wanted to bring up something that we've been talking about since last week, and that is this chart of feeder cattle, only because of the technical characteristics of this, sharing with you the ABCD pattern that we see. The ABCD pattern between November and December is absolutely a perfect one. It is telling us that we should be bottoming here on Friday down at the 1.618 level. We could be there today without any trouble at all. That would be around the 134.30 level. We'll see what happens from that level, but this is what we would refer to as a perfectly timed ABCD pattern, where time and price are coming together at the same time on Thursday or Friday around the 134.30 level to 133. So keep an eye on this one. We're going to be following it just for educational purposes. We don't trade it too much, but to watch it as we see fit. David White asked a question a little while ago about the risk on futures on limit up and limit down moves. I didn't really go into much detail. We don't see much of that anymore because they usually expand the limits as they go up. They'll expand them so that there's more trading. Years ago, they would lock limit, and that was the absolute worst thing to do because that just brought in more fear, and you don't want to get involved with that. That's not a lot of fun when you're trading under fear. But if the markets are trading liquid and active, that's the best thing. That is the real one of the many advantages that you have with foreign exchange trading, folks. There are no price limits. There's no price limits on cash, and they do have the stops in there, so you need to trade with a stop and everything. Otherwise, if you don't, you're telling the market that I know more than you do. And if there's one thing we know on this planet is you never know more than what the market knows. It's really quite amazing that some people think about that. And in Roy Longstreet's book, The Viewpoint of a Commodity Trader, it says that men are often wrong, markets are never wrong. So just keep in mind that that's where the real money is where that price is where all the buyers and sellers are coming together, and that's the real key to this. So going to be a lot of emotionalism in here. If it's not one thing, it's another, but this is what the markets are supposed to be doing. We've said since last fall that the volatility is going to go wacko, and we're going to start seeing more and more of it. It looks like not just in the stock indices, but we're going to be seeing it in bonds, and we're going to be seeing in commodities and stuff. So we'll be having some great opportunities here. Remember that with pattern recognition, you're not following the fundamentals. You're only looking at the what you call it, see what's going on. Mr. Z, are the June cattle, are they down again? Because they should be really close to the 98 level. I believe that's the big 1.27 Clairvoyant. Yes, I remember Claire. Anyway, watch the cattle. I think that the best thing to do if you wanted to be safe is to make sure that the bottom comes in. And if the market goes lower, if it gets unchanged or up on the day, that would be a good sign. There you go. You're right near it, right there, 97 on the June cattle. Keep an eye on the August too, because they're a little bit different in their the August are acting a little better than the June, because I think they're going to think this thing is over by August anyway, but we'll see. But if they get up on the day, that's going to be the sign that the shorts have pretty much pretty much given up the ghost. So they've got to get the cattle above the 99 level in order to them to get moving. So we'll see. I don't even know what the limit. I think limit down is 3 cents in cattle. Mr. Z would know that. I don't know anymore because I hardly. It is 3. Yeah, it's 3 cents. I tried to get Rich on the phone today, and his secretary said not today. He's in the literal swamp today because he has so many people involved in these grains, and they want to be buying during this break here, and he has to hold their hand and stuff. So we'll try to have Rich on next week. Tomorrow we have Stan Harley, and then on Friday we'll have our good friend Bill Meridian. Regarding the options. Options don't trade with limits, David. That's one thing I'm pretty sure of. The option market does not have a limit. That's why options are options, because they you're trading something that is they're all time sensitive, but I believe that options don't trade without limits, and that's how people hedge themselves, and that's yes, they do trade. Yep, and that's how they determine what the limits are going to be the next day, because they watch the options, because if the options show that there's stuff out there, they will raise the limits so that the trading can be implemented quite freely. Believe me, the exchange just does not like to go through stuff like this, folks. It's hectic over there at the Merkin Board of Trade. I can tell you that, because they do not like this, and neither do the clearing members. They don't mind the volatility, but they don't like the limit moves, because the limit moves bring on margin calls, and if a margin call is not met, that just brings in more selling. So these firms, if you remember, in order of the pecking order of preference is first of all exchange. That they protect themselves better than anything else. After that, it's the members of the exchange, and after that, it's the brokerage companies. And guess what is after the brokerage companies at the bottom, folks? You and me. So just remember, you got to protect yourself. There are people in there looking for you, but they're looking down, not looking up. So keep that in mind. Take a little break here. 877-927-6648.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Well, lo and behold, the market started a rally, so we'll see if this is going to be something of importance. Remember those numbers that we talked about, 25, 55, and then 6320 or 6300 in the NASDAQ. That's very, very important, because if they turn around, go the other way. The bonds have been telling us all morning that they've already started selling off again, but the bonds are telling us that rates are going to be going higher. I don't know if that has anything to do with the rest of this or not, but we'll wait and see. I've gotten a request to show the 3 drive pattern in the gold that I was looking at, and I would like to tell you, but folks in the old James Bond and the old MI6, if I told you, I would have to have you whacked. But I'm going to change the venue today because I'm in such a good mood. I'm going to show you this little pattern that I've been watching in gold, and believe me, folks, all I want to do is to show you what I was looking at. There was an ABCD pattern, and the price of it was pretty good because you had a really nice, $8 move, which is good. That's $800. That's equivalent to, 500, 700 points in the S&P 500. Yeah. So you're basically looking at a really nice pattern here. There's a 3 drive pattern with an ABCD structure in here, and I was just watching it, and the only reason I was watching that, folks, is because I was watching the price of silver because it's acting so badly, and so is platinum. Folks, they're not going to go up together unless there's something really big happening. So keep in mind that that's the only reason I was looking at that short-term trade. And, you got to be focused on that. And, if it goes through there by more than $1 or so, you're most probably going to be wrong. So the 3 drive pattern offers you the minimum amount of risk that you have to use, because if you get beyond, 0.3 by more than $1 or $2, you're most probably, you're going to be wrong. But you have to have your order setting in there, because if it's not there, you just can't do that. I was going to do the same thing with Amazon today, because I would imagine that Amazon is, I don't know where Amazon is trading, but Amazon had a really bullish pattern yesterday. I don't know where is Amazon up or down? Could someone tell me? Because I don't follow the stocks, but I would think that Amazon would have one of the better patterns for a buy today. 1370, is that up or down? Oh, down 21. So there you go. I'm wrong on that one. But it should hold at that level, because that's a really important level that we posted here on the Amazon just a little while ago. Fact is, let's bring this up here and see there. Oh, it's way above the numbers. Yeah, it's down. I see. It's down. Well, it's down to about a 78% retracement. So pull up and take a look at it. But that's a really important number in Amazon there at 1355. We get below that, Amazon's going to be in some serious trouble. But right now we've got a little bit of a rally going on in the market. Let's double check to see where we are right now. Let's just take a quick look here. Yeah, we're trading at 25.81 in the S&P. There should be a little resistance up around 25.93, but if we get back above 2,600, that's 20 points away in that S&P. You could get one heck of a rally in here, folks. You certainly could, because we're at pretty stiff resistance right where we speak right now, around 25.85. That's that small ABCD from last night. Looking at a half-hour chart, there'll be a nice ABCD pattern sitting there. So as long as we stay below, 25.90, we should have a little bit more of a sell-off. There should be some pretty good support down around 25.70. We're trading at 25.78 right now. But watch the numbers on retracements, and there's a lot of news out there, and it changes momentarily, and it could easily come in and say, well, we've worked out some of these problems with the tariffs, and personally, they've been, China's been, raking us over the coals for many years, and, whether this is going to have any effect on it or not, but at least with the administration, they've stopped intellectual property rights of not being violated now. When you go to China, you can't buy Louis Vuitton purses or things like that. You can, but they're very, very low quality, and people don't even like to sell them. They're so bad. But anyway, that's neither here nor there. So keep an eye on that. But regarding the euro, another one to look at for these tariffs and stuff is the euro, and we're trading around 123, 122.95 right now. That's showing that there's not any indication that there's anything on the horizon that's going to damage these economies by very much, because if there was something really dramatic, it would be showing in the foreign exchange market, and we're not seeing that at all. We're really not. So that's one of the things that we keep an eye on. The main one for futures, of course, is that bond market. And we had that chart that we posted several times. I guess I should post it again because it's that important. And that's that level that we hit in the Treasury bonds, because that is a really monster spot, folks, for getting short around 147, because it was a equal rally that we had during October and November. The time was correct too. I mean, these rallies, it's amazing that you see these things over and over again. Let me give you something that's going to happen here at TFNN on April the 17th. My good friend and trading buddy, Jim Bartolioni of V50 Partners, is going to do a webinar on music, the markets, and vibrations. I think it's going to be called Good Vibrations by the Beach Boys, of course, but it's music, vibrations, and the markets. He's going to talk about the works of Pythagoras, Galileo, Newton, Tesla, and how these ratios and stuff fit together in relation to music, and it's really an incredible presentation. He made this presentation to the Market Technicians Association back in January and blew their socks off. And I told him, I said, we got to do this for TFNN, because this is something that I think you folks will really enjoy, because it shows, the relationships, not only just in the markets, but how they relate to nature, with electricity and with music and in medicine. I mean, the DNA, that we have in our bodies, it's all related, to the Fibonacci spiral. It's how your chromosomes line up on that spiral that tell you who you're related to. So, that's really an amazing thing. In fact, that DNA, how they figure that out is the DNA is the main reason why there's never been a murder conviction in the state of Mississippi. And the reason for that is they all have the same DNA. All right, we'll take a quick look here. We got a break coming up here pretty soon, but watch the bonds, folks. I think it's really important to pay attention here, that we're watching some of these things make some pretty big moves, and we want to watch it very, very closely. We're going to be looking at the hold on just one second. I have to do something. We've got a break coming up. Hold on here. See today. Just want to hold on here a second, and we'll be right here. Good day. Okay. Well, we got a break coming up. When we get back from the break, we'll quickly review these numbers that we're looking at for the day, because that's pretty much what we're watching and stuff. So it'll be interesting. It's very nice that you guys post this stuff about Fibonacci levels in the room, because it's great information to learn. and it's very, very important. We'll see. Yes, there's a really, that number up there, 2586, is very important, P. And above that 2591, I mean, this market's got legs. It could easily do it. Hey, think about it, folks. We got really, really bad news, just like we did the other day, and the market keeps coming back. You know, that's not the sign of a bearish market. A bearish market just keeps dropping. Look at cattle and hogs. Amen. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads-up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're trading at 2582 in the S&P. If we get it above the 2593 level, we could have a really good run here to the upside. It'll still be down on the day. Now, one of the things that I talked about, and I focused it, if you'll notice in that NASDAQ chart, and once we broke those 786 levels from yesterday's high, that led to that market going down into new lows. Now, we made new lows in the NASDAQ, but we've held up relatively well. We've held up relatively well in the S&P 500 and also in the Russell. So it's not the end of the world yet. And just because there's tariffs going on, believe me, a lot of this stuff is like poker playing, folks. They just don't want to show their hand. But they have to show that they're just not going to stand by and put up with things going. This is what's happened in the United States. We've been sitting there and letting them do this to us for years. Give you an example, folks. The Chinese put a tariff on American cars. Folks, I've been to China 26 times, I think, over the last 15 years. I only saw about 9 U.S. cars. They were all Buicks, or earlier models, but they don't sell Cadillacs there. They don't sell Chevys and stuff like that. They just don't happen. And you never see a U.S. car in Hong Kong. The tariff's 100% to bring it in. You never see a U.S. car in London. So don't get enthralled about these things about tariffs and stuff that you see, because that stuff's been going on for a long time, and I think it's like a giant poker game. And of course, I like poker, so I'm looking for who's trying to draw to the inside straight. Anyway, keep an eye on it, because if we close badly today below 6,300 in the NASDAQ, we're going to be looking at another 1,500 to 2,000 points down in the Dow, and another 500 points or so down in the NASDAQ, and that would put the S&P down about another 70 handles. So the close of the day is what's going to be very, very important, not the open. So the opening's already started to be strong, which we sort of expected, but we'll see what happens. So 877-927-6648. Stan Harley tomorrow, Bill Meridian on Friday. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.